Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk a little bit about the news cycle, which is awfully depressing. I'm going to apologize ahead in advance, but we do have some breaking news that is very serious, and it's something that could really upend the markets. And if things go a certain way, the market's trading, none of it's going to matter. You're going to see a major meltdown in the world of finance, the global monetary system. Pretty much everything could be hit and hit hard. So we haven't really seen any good news come across the boards today. We're going to go over some of the stories. It's Trump. Trump's after it again. J.D. Vance made a statement in public in Budapest that wasn't exactly the most positive thing, and we're going to talk about it a little bit. We're going to talk a little bit about this thing escalating to a level level maybe not even anyone ever predicted. And we're going to look at it as well. We're also going to look at some of our prediction markets and what exactly can happen or what we think is going to happen. There's something going on right now that we didn't think was going to happen. So I'm going to go ahead and cover that as well. We also had durable goods come across the board during the U.S. Early session, actually the pre-Wall Street Open. Big picture, does durable goods mean anything? It doesn't mean a damn thing right now. Everybody's watching Iran. Everybody's watching the brinksmanship and the saber rattling. We believe that you're going to see something probably almost unprecedented a little bit later tonight, unless a deal is struck at the 15th hour, the 20th hour, or whatever. But right now, we're down to about 7 hours. 7 hours from now, you're going to see about 8 p.m. Eastern time. You're going to see the deadline expire between the United States, the Trump administration, and Iran. As of right this minute, we're going to talk a little bit about the fog of war. Nobody knows what's happening. And I'm just going to tell you a little bit of what I've heard today, but you can't really stand by the accuracy of any of these stories because they're dropping all the time from all the different news outlets, and some are saying one thing, others are saying another thing, and it's going to be a real serious situation as we come down the home stretch to this deadline. So let's sort of hope and pray that cooler heads prevail here and that something is rectified, that they can cut a deal of some sort, but this just doesn't look like you're going to get a deal, and that means you're on the next step, and that's called the threat escalation ladder, and we're watching it unfold in real time. So I don't want to be a bummer. I don't want to be a drag to anybody out there, but these are very serious times. I heard of one gentleman earlier today say this is like the Cuban Missile Crisis back in the old days. I don't know if it's that serious, but this feels to me like it's definitely a tipping point in the Iran war. And I think that this, whatever happens in the next 72 hours or so, or maybe even the next week, 2 weeks, is going to dictate the financial situation facing pretty much the entire world here for the next probably 6 to 9 to maybe even 12 months. It's very serious what's happening. So good to see everybody back in the room. Kirsty, good to see you, Kirsty. Welcome. Tina Jing, always a pleasure, Tina. Good to see you drop by today. Jason Maxson. Yeah, Shane, one shining moment. Yeah, Michigan brought it home. Only 6, though. They didn't cover the 6.5. So those lines and those basketball games are so tight, especially in championship games. Good to see everybody over in the How to Trade community. Ralph H., always a pleasure. Ralph, Bobby, Bob, Lita, and Tuku. Good to see everybody. If you have any questions at all, feel free to ask. I think that I'll do my best to answer them, but I got to tell you, I don't have a whole lot of answers right now. We are going to look at some trade ideas. There are some numbers out right now that we potentially could play, but you sort of hesitate to really say anything about key levels or maybe bullish or bearish because it's such a state of flux. So interesting stuff here, but we're going to have a few trade ideas out for you. I put one out earlier today on the Great Britain pound Australian dollar. Again, we've got a key level in there that I really like, so we're going to point that out here in just a few minutes. Let me see. ND, hi Shane, thanks a lot for doing these live feeds. Helps a lot to improve our skills. You're absolutely welcome, ND. It's my pleasure. I've been doing these for over 4 years now. I guess this will be my 5th year of doing live streams, literally thousands of them. I've got to meet really a lot of great traders, talk to a lot of great traders, and answer a lot of questions, but I sure appreciate everybody dropping by. So if you have any questions or anything's on your mind you want my opinion on, or if you want maybe some guidance in a particular market, just ask. Be sure to ask, and we ask and ye shall receive, right? All right, let's get to it. BBC News. Once again, the news outlets that we're going to talk about here, I'm not going to vouch for any of them. I don't work there. I don't support them. I'm looking at pictures. I'm looking at headlines. And right now, that's all anybody's really doing. So you see right here, Trump hit Truth Social again this morning with a pretty ominous statement. Trump says a whole civilization will die tonight if Iran doesn't make a deal as the U.S. hits Karg Island. A couple really important things about that headline. Number one, that's a hell of a threat. I mean, I don't think we've ever seen anything like that out of a United States president. So we're very much into uncharted territory. The other thing is the U.S. is hitting Karg Island. The U.S. and Israel are actively hitting Karg Island right now. And it feels to me like that's probably going to be your ground invasion. They're going to go after Karg is what it looks like. So right now, some of that infrastructure is being hit. That is the energy hub for Iran. If Karg Island, if you have a catastrophe there where you have just the destruction of the oil infrastructure and of the refinement of the storage facilities, of the loading facilities, the ability to fill up oil tankers, once these things are blown up, they're going to be blown up for a while. And so when you see the energy infrastructure being targeted, that is a major escalation. It's a major escalation, and it's something that I got to tell you, I didn't think we'd see it. But you can really start to get a feeling for what's happening here. This is brinksmanship at the highest level. So that was really a heck of a statement from Trump. And then you had J.D. Vance speaking just a little while ago. The U.S., the U.S. has carried out new strikes on military targets in Kharg Island. Interesting. Speaking in Budapest, Vice President J.D. Vance says the U.S. has tools in our toolkit that we so far haven't decided to use against Iran, but adds the U.S. has fundamentally completed its military objectives. Well, who even knows what's true at this point? But they're talking about tools in our toolkit that have not been used. We all saw the bridge strike. Those videos that hit the internet the other day, that was really a major destruction and escalation hitting civilian infrastructure. So this is the question. A lot of people have been asking it. I don't have any idea. I have no idea about nuclear weapons. I'm not even going to pretend to speculate on this, but they really had to start rolling back some of the rhetoric. So the White House has been saying, no, nuclear force isn't on the table, and we're not going to drop nukes, not going to do tactical nukes or anything like that. But still, there was a leak in the White House, and it was starting to come out that those discussions were being had. And I never thought we'd see the day where this was actually happening, but it is. It's here. There's at least people having the discussion about nuclear weapons. Andrea Garwell, good to see you. Andrea, welcome. So as much as I don't want to cover this stuff, and I'm not going to dwell on it, what I can say is these stories right now are being floated, and a lot of it's clickbait. But in our prediction markets, we can see what exactly has happened. U.S. forces enter Iran. They already did over the weekend on the rescue mission. U.S.-Iran ceasefire. This is one that we're definitely looking at, watching closely, and it just doesn't look like you're going to get any satisfaction here this month. It looks like you're going to roll through the rest of April, more than likely in an escalatory type of a cycle. So, these odds, to me, they're not gospel. They're not 100% accurate, but they've been pretty accurate. They've been pretty accurate about a lot of things. So you're really looking for probably another 60 days of the war is what it looks like to me. Kharg Island no longer under Iranian control. You can see that they're starting to hit it, and they're starting to soften that up. If you're hitting military installations on Kharg, more than likely they're softening it up for a ground invasion. I think that's probably what's going to happen there. It's been a hot target. Everybody's been talking about it. So that's where we are. That's where we are with the Iran situation. It's not very, very great to talk about any of that stuff. I'm kind of getting sick and tired of doing it, but that's where we're at. That's where we're at, and what this all boils down to, realistically, what this all boils down to is crude oil. I mean, this is it. WTI crude oil is trading at about 114.73. Sort of been a tight day today. Not really a huge bullish break. You can see we had a little bit of price action there, about 1.87%. But really last Friday was the day where the bulls really stepped in and took over. They drove it from 97.50 all the way up to 113 and then closed at 112. In my humble opinion, you want to be buying pullbacks any chance you can get. Just because you're probably going to want to be on the long side of this. However, if you get a deal, if you get a ceasefire, if you get a deal at the 23rd hour, or something crazy happens, or Trump, he's been talking about maybe kicking this deadline down the road again. It's really hard to figure out what's going to happen, because if you do get a deal, you're going from 114 to 100, and you're going there fast. We know that. We know right now that everybody's speculating on the future of crude oil prices. They're speculating on what's coming next, not what's happening right now. Always remember that. When we price commodities, you're pretty much pricing the ongoing supply and demand dynamic. And that means if there's going to be a disruption to supply, or maybe a disruption to demand like we saw during COVID, then you're going to have to price that in, and you do it ahead of time. So just because we're pricing 114.85 on this CFD market doesn't really mean that you're going to be getting 115 for a barrel of oil today, but we are pricing in those assets for what they're expected to be worth in the coming weeks and months. So when we see a big rally like this to 115, you have to respect it. But I'm not advising anybody to step in and buy 115s right now. I'm really not. I don't think that that's the play. We could see a big-time reversal. It could happen. It's happened before. It could really happen. But if we don't get that, we're very much in bullish territory, and we have to start being honest about what could happen here. If this deadline comes and goes, and the United States ramps up operation, and let's say they start really going after the power plants and the energy infrastructure, it's going to be a complete nightmare and a mess. I mean, it's going to be an absolute mess. There's going to be questions about what's the global supply going to look like moving forward. How long before this stuff can come back online? What are the countries over in Asia that are taking a large portion of this oil out of the Persian Gulf? What are they thinking about? Does that mark a point where other countries enter the war? I mean, I think that all bets are off and anything's possible right now. So we're looking for a deal. We'd love to see one. Love to see the shooting stop and both sides sort of cool down a little bit and figure out a way forward. But if that doesn't happen, and it does not look like it's going to happen, you're looking at probably 119.48, sort of the high of this conflict, of this war. You're going to blow that out of the water. We're going to be right up here, right around 125. I think that will happen relatively quickly as soon as the deadline passes and once we start to see exactly what the United States is going to do in terms of large-scale attacks. If they're big, if they're melting energy infrastructure, crude oil absolutely spikes. You'll see more weakness in stocks. Sort of strange, isn't it? I mean, we're looking at the stock market today, and you just don't have those big moves. You're not down 1,000 points. You're not down 500 points or 750, 2,000 points. It's nothing like that. It's weak. The market is weak because nobody really is sure what they want to do. Do you really want to buy stocks going into tonight's close? Probably not. I'm not. I can tell you that right now. But is the market still sort of saying, listen, if they come up with a deal and they open the Strait of Hormuz and you go back to business as usual, stocks are probably going to pop big time. So you just sort of have to sit tight. I know we're getting tired of sitting on our hands and we want to get in and trade and make money and achieve our financial objectives. But there's a time and a place for everything. This is wildly unpredictable. But one thing we do know, if these attacks come big, or if there's a big issue on Karg Island where maybe the United States lands, maybe they take casualties, maybe the situation just explodes, you're going to see oil prices consistently rise right up to 125. I don't see any way around that. However, peace deal, I'm looking the other way. I think you drop to 100 and you drop down there fast. 97.50 would be an absolutely beautiful area to buy. We hit that one the other day. That's a pretty good one. So I'd be looking at support down there for U.S. oil. 6 of one, half a dozen of the other guys. Discretion is everything in this situation. You don't want to force something that's not there. I don't have many answers for you today. I really don't. I'm just in wait-and-see mode like most of you are. But we do know when the volatility is going to kick off. Watch before today's U.S. close. You may get a deal announced right before the close. We've seen that happen. Also, right around that deadline. Remember, once the deadline comes and goes, we expect something to happen immediately. And most of us believe it's already happening on Karg. That's probably the opening salvos of what's going to be a large offensive. We're going to wait and see how it goes. US 500. This was a market that I broke down in the Switch Markets Hot Pick, the Switch On Hot Picks of the week. Interesting type of a scenario because you're seeing really the daily volatility here in the US 500. Significant. Lots of volume, and these are just tick charts, but lots of volume. You're starting to see that ADR, that average directional range, or average daily range, really be elevated. We're looking at 125 points, 129, 139. That's a pretty good size range for the US 500, for the S&P 500. So watching this closely, I do really like this weekly chart. I'm really leaning on my long-term technicals these days because it's important to get sort of a basic idea of what the markets are doing and not to make a mistake based on a 30-minute chart or a 20-minute chart or a 5-minute chart, whatever. What I'm looking at here is a nice big rally. Potentially, if you do get that peace deal, this US 500 could pop, and it could pop right up there, and we could be looking at that 13-week EMA, somewhere right around 6694, 6700. That would be pretty tasty. I would love that short up there. Just not sure we get it. Just not sure we get it. Right now we're in a holding pattern. Really sort of a bullish start to the trading week. You had Easter. You had the Easter holiday. You had Easter Monday. Limited participation yesterday. We're starting to see very measured activity from traders in there today because they don't know what's going to happen with the news. And that's people, they're sort of dipping a toe. We know that the risk profile is elevated, but you don't really know what's going to happen just yet. So it's very much in a holding pattern. If I was looking at the US 500 for today, and I'd say, okay, right now we're printing about 65.86, 65.63. All right, let's go to a 30-minute chart and take a look at the intraday action. Probably not a bad area potentially to bid for just a late-day scalp. I would definitely not be waiting around trying to pick a bottom in this market, but you can see that area right there, 30-minute chart. Nice big rally. We sort of started off on the bear, and that's all about the news cycle and Trump. Nice sell-off there, and then we sort of bounced, got back above that 50% level. Very slow, though. I'm not really too blown away by the participation. Not surprised. Might be able to step up and take a scalp right down from this area, potentially. But big picture, do you want to be risking a ton of money with this news cycle? Not me. We've seen way too crazy a price action come across the board since this war started, and it's been a wild 5-6 weeks. It's been absolutely wild. So we've seen things we've never seen, and that's always tough to trade. What you got here, gold. Notice that gold's almost very, very similar on that 30-minute chart, that 30-minute price action to that US 500. Interesting. Typically, you see sort of a negative correlation there. You're not really seeing it now. Really, the negative correlation has to do with the U.S. oil and stocks. That's on display today, but also that VIX, up 9%, but still only at about 26. There should have been probably a lot more money flowing into gold. It's just sort of flat. Crazy stuff. The correlations are all breaking down. All you can really do is fall back on your technicals and use your head about risk. We talked a lot about psychology yesterday, what it was to take risk and what it was to take responsible risk. I'm a big fan of taking responsible risk. So this area right down in here, we've got outlined as being a potential long-term support zone, 44.36. I sort of outlined that yesterday. You'll notice on your daily chart, nice compression break. And now if we pull back, potentially we'll have an opportunity maybe for a late day bid there. I doubt we get it today, but maybe tomorrow. It's certainly possible. 78% on that daily, right around 44.50. That's a pretty good zone. It's down there about $110, but it could move that fast and that far on the news of this ceasefire deal or lack thereof. So we're watching gold closely. Don't really have any good insights to give you here. I like that. Anytime I get a 78% level or a 62 or a 38 that lines up with maybe a monthly Fibonacci, then I'm starting to get really confident about that being a robust support zone. The hardest part is just getting an opportunity to make the trade. And that's sort of what we're stuck with right now. We're just in a waiting game on market conditions that are challenging. I think that's probably the understatement of 2026, but they are challenging right now. And as we wrap up Q1 and really start rolling into Q2 in an election year where there is a hot war going on with kinetic exchanges, wow, what a difficult scenario. It was a lot easier trading it last summer. It was a lot easier trading it the year before, too. In any case, something like this, nice rotation. You've got sort of it's not a pennant, but it's definitely a compression pattern. You've got the nice big day that was Good Friday there, sort of the Thursday-Friday sessions. They rolled into one, and then, you weren't open Friday, basically. But this nice compression there yesterday, compression today. That market's coiling up, and we're really waiting for a move. So if we do get an inside bar, it looks like you're going to have a double inside bar. We're trading right at that 13-day EMA. This market is completely non-committal. If you want to be bullish or bearish, that's your own business. For me, maybe play a breakout, maybe play a washout selling beneath yesterday's low, or if we go off the board sort of where we're at right now, very flat, maybe looking to sell today's low during tomorrow's session, that could be a pretty good trade, and maybe even buying and trying to play a breakout of that compression could be pretty good as well. So a lot going on there. A lot going on, even though the chart's dead. This is the calm before the storm. There's no question in my mind. This is the calm before the storm. As far as gold futures go, I do want to pull my TPO charts. We're not going to get to the TPO maybe on Thursday. That tutorial. I really wanted to do that, but with so much news, there's a real chance that I'll be on live tonight if we see some of the big time events that are possible. If we see a big news event or a big development around the ceasefire, I'm just going to come on and go live. We'll look at the markets. We'll really break down what's happening and how to game plan for tomorrow's session as well. But you can see your point of control. This is just a textbook dead market. This is absolutely beautiful stuff because it shows you the last several days the market just hasn't done anything. Look at point of control there, point of control there, point of control there. And you can see that we have just done a ton of business right in this area, right where the price is right now, 46.82. So I would, that is prima facie evidence that the market's dead. There's just nothing there. So right now I want to see something really expand. I want to see the range expand before I'm even considering doing anything. The value area high, look at the value area high right there, right up around 46.90. The value area low down around 46.60. That's only $30. And from seeing some of the gold ranges that we've really witnessed over the past 4 months, 5 months, that is nothing. That is so tight. I mean, that's so tight that you've got to be very careful not to get chopped up. The odds are that you are going to get chopped up if you try to pick a direction in this market. So if you wanted to be a rotational trader and maybe buy the point of control or sell the point of control and just look for real tight scalps, 4 or 5 ticks here on this June gold futures, yeah, you could probably get away with that. But is it really worth it? I don't know. I find it extremely challenging to really look at this type of chart, this type of market profile stuff, and diagnose what's happening other than the market is just flat. I mean, it's just flat. That's really all there is to it. So we may be able to find a trade here using, let's see, our oil futures, May oil futures, something like this. You can see we're right at that point of control as well. Potentially, you probably could have bought in this wave, but it's just really hard. I mean, it really is hard. If you wanted to bid the point of control, you certainly could. But look at these. I call them sweeps. 113.63 is that 30-minute low. Look at that low, 114.28. Now we're trading $1.20 higher. I mean, those ranges on the 30-minute bars are huge. I mean, it looks the market itself doesn't look good. It looks sort of dead. But take a look at what you've got down here with your periodic range on a 30-minute chart. We're looking at $1.51 is a 30-minute range. That's a staggering amount of volatility and really just sort of a sprawling market. So, if you wanted to be aggressive and you wanted to trade, this point of control right here, this number, 115, probably could get away with trading that a few times. The intraday traders already have, but the value area is extended. You're looking at about 116 down to about 113.39, so that's $2.70. Really significant ranges, and then you can see your daily high is right up there at about 117.63. So I'm watching those 119, that 119.50 level, the war's previous high. I think you're going to watch that out if the news breaks the right way, and then you're probably going to 125, and then we'll start talking about crisis trading and what we're going to have to do to manage what could be one of the biggest economic downturns we've seen in a long time. Let me see, Pavel, good to see you. Camco, new target price, $215. Camco, huh? All right. Camco Corporation. Probably don't need the TPO stuff, but 30-minute, $2, and it's really $215. Holy cats. Who put that one out? If that's yours, I mean, I'll darn sure just sort of tip my cap. CCJ. Fressy, good to see you, Fressy. Welcome. This right in here is fascinating stuff because we did reject that 62%. A nice sweet bid right off 100. I believe we covered this one yesterday. But what you're looking at now is you're thinking 215 based on the tremendous oil run. That would be my guess. I don't know. I mean, I really don't know. I think that's anything's possible, and I won't say that it's not possible because all it takes is a hedge fund to line up and say, okay, we're gonna add Camco to our portfolio, and yeah, you could get it. But as far as from a trading perspective, you probably want to bid hundreds. I would wait. I think that you could definitely wait a little bit and have an opportunity to get in there at a much better price than 110. But if you didn't want to miss the boat and you were confident that these prices were going to explode, maybe you know something, then you definitely could just dive into it. I'd probably be waiting just because that 100 level is pretty juicy. That's for sure. Remember, if you want to trade any of the markets or any of the ideas that we're talking about on these live streams, feel free to head on over to Switch. Bring your trading ambition into focus. Thousands of global markets. Tight spreads, zero commission accounts. They are $50 minimum deposits, but they are running a 50 on 50 special right now. So remember, I work with How to Trade. I'm the head trading coach over at How to Trade, but we have partnered with Switch Markets and these promos. Pretty good place for you to get market access. Especially if you're in a supported municipality. I know not all municipalities are supported, so I know in the United States you're not able to access Switch, but that may just be a temporary thing. I know they're expanding all the time, so just sort of keep an eye out, and maybe they're coming to a city near you. Who knows? We'll just have to wait and see what develops. All right, let's hit up a trade update. U.S. deadline for Iran draws near. This is going to be a weekly trade on our Great Britain pound Australian dollar pair. Pretty good level. I really like this zone. We've hit it before a couple of times, but this is a nice weekly range, nice big spike high, and then a significant downtrend on the weekly. And now we're just sort of trading right beneath that 38% level, which is right around 193 even. So if you're around 193 even, you've got 193 flat, 38%. Plus you've got a 13-week EMA up there at 193.18. Pretty good area maybe to short right beneath 193. It's one of those deals where if it ain't broke, don't fix it. This has been really a robust resistance level. Have an opportunity potentially to get it again. I do like the idea of sort of getting away from the U.S. dollar, especially given a news cycle that's as power-packed as this one is. But that right there, 193, probably pretty good resistance. If the market gaps up against you, you just get out. At this point, you just absolutely get out. That's probably the ticket across all of your trades. You're going to want to make sure that you don't get caught up in the minutia of maybe a news story that may not seem like a big deal but runs the market directionally. You don't want to lose a fortune on days like today. Got to avoid that. You got to avoid that. That's for sure. All right. As far as what the news cycle is today, quiet. It's just Iran war. Basically, that's what's important. Tomorrow's the FOMC minutes. We're going to have that live for you. Be sure to join up. Ask some questions about monetary policy. We'll cover our expectations again tomorrow. Remember, the FOMC minutes is not a press conference. It's not Jay Powell coming out and talking. It's a written document. We'll break it down, some of our expectations in real time. I may move the stream time to cover the release live. I don't know. We got to wait and see. A lot going on tomorrow, and a lot of it depends on how late we're in front of the screens tonight. That's for sure. So stay tuned for that, though. FOMC minute's going to be a big deal. They're going to talk a lot about the war. They're going to talk about their inflation expectations. And more than likely, Jay Powell is going to address the DOJ charges against him and the Fed. So we're going to be watching that one closely as well. Thursday's initial jobless claims. That may be a great day for us to do our TPO workshop. I just got to figure out if we're going to do it or not. Pretty good, a lot of demand for it, but I would like to probably maybe take some more time and build out a much better presentation. I don't know. I got to take a look at it and see if we get to it. Friday, U.S. CPI. That one, we're going to have U.S. CPI live, 8:20 a.m. Eastern, about 10 minutes before the number drops. We're going to get in. We'll break down the state of inflation. We'll talk about the most recent news out of Iran. More than likely, it's going to be an active news cycle, and then we're also going to do a little bit of live trading. Haven't been doing much live trading. Haven't really got the strategies going because things have been so whipsaw. Friday was sort of a nothing burger. Markets were closed. Yesterday wasn't really that great either. Today, there is some action in there. I mean, there is some action, but it's not necessarily hot action. So I'm sort of on the fence about doing real short-term trading maybe this week. We'll do some after U.S. CPI, though. There'll be a lot of action in the market that day. News of the day, U.S. durable goods orders. This is sort of I would definitely call it a peripheral metric right now, even though it is a three-star event, a five-star event, whatever you want to call it. I don't know many economists that are sitting around stressing over the durable goods orders numbers from February. I don't think that anybody's looking at that. You're looking at the Strait of Hormuz. You're looking at Carg Island. You're looking at big news events right now. So durable goods did slump, came in. These are preliminary figures. This is the initial release, and they will be updated. Typically, preliminary numbers have much more a greater impact on the markets. But like I said, these are it just pales in comparison to what we're dealing with out of the Middle East. So durable goods orders month over month, February, you're looking at negative 1.4% monthly drop. That's beneath expectations, a negative 1.1 and down big from the previous release, a negative 0.05. Now remember, durable goods orders, these are things you typically finance, washing machines, refrigerators, maybe something about, I don't know, lawnmowers. Lawnmower, I guess, is a durable good. Appliances, typically things that you finance, is what a durable good order is. You like to see strong durable goods. That means that there's an availability of credit, and there's also the desire for consumers to buy things. And we're starting to see really some slack in this economy, and it just doesn't look good on many different fronts. So we're watching closely. Jury's still out. How bad's the inflation going to get? I mean, $115 crude oil. The next step's $125 or $50. I mean, inflation could get really bad this summer. It could get really bad. So we're watching this closely, but these numbers, they don't matter. We can look at them all we want. There's not really much conclusion to draw there at all. Here's a good look at the last 3 years of these durable goods orders. You can see things were looking a lot better last year. Remember, everybody ran out and bought their durable goods. They bought their items during that tariff. They wanted to beat the tariffs. So we're watching basically that all pretty much given back, and then you had a pretty good month last fall, but the last 3 months have been not good at all, and that's sort of indicative of an economy that is a little bit, we don't really know where it's at. We think it's a little bit worse than what we think. Not to be a bah humbug, But things are changing. They're changing in a big way. Let's go ahead and give you a trade update from yesterday. We definitely put down this trade as being a relatively strong one in this dollar Swissy. Got the 13-period EMA, 13-month EMA out there at about 80.70. That's a big deal. I'm watching that one closely. I think that could be a really good trade to the short. Well, I want to see that area tested, though. Right now we're trading right around 80, right around, 79.95. So we're in the neighborhood. I think the Swissy U.S. dollar is probably going to rally a little bit if these strikes are carried out the way that most people believe they will be. We'll see some strength in the U.S. dollar. You're going to see those bond yields go up. We've talked a lot about the bond markets and the debt markets, and a lot of it's going to be a function of the U.S. government trying to raise money. And you're going to see that. So those yields, I expect yields to keep rising and the dollar to maybe strengthen a bit. That should give us a bump in this dollar Swissy, maybe to get that short. I do like the opportunity there, though, to take a short and basically play the Swiss franc against maybe the a periodic top in the dollar. I think that could be a good idea. But once again, it just depends on the news cycle and how tough things can really get. Euro USD, once again, this is a level that I've put out there a lot, 38% right down there around 113.50. Really like that zone. We have an opportunity to get it this week. Maybe tomorrow's FOMC minutes brings it. Maybe we'll see it on Friday with the US CPI figures. So we can certainly do that. I think that those are two pretty good majors, situations where you got good support and resistance zones in the majors. What you don't want to do is take them both at the same time. So you probably would pick your poison, pick which one you like better, whether it's the Euro USD or the dollar Swissy. One of the great things about the way that these two levels are going to function is right now you're trading about 115.70, about 200 pips above this area, this support zone. So that's going to give you a chance maybe to get in there and get that Swissy trade, and then maybe come back around and get the Euro USD trade a day or two later. So it always helps to have your levels laid out so you know exactly where they're at and what exactly you're going to have to do to succeed. As far as the rest of the majors, like I said, be careful if you're going to trade just a bunch of U.S. dollar pairs. More than likely, you could get messed up. You could get messed up because all of these things are dependent on the dollar. And if you take a bunch of different positions across all the majors and the dollar goes crazy, you're either going to win them all or you're going to lose them all. So we don't really want to see that. I don't want to see that. However, a lot of folks are trading the dollar yen. You can see the dollar yen rallying towards that 162 level. Right now we're just beneath 160. So be ready here. I mean, you've already seen a decent gain for the month of April. It's very, the month is still in its infancy. If you wanted to make a shorter term trade, daily chart, maybe buy a pullback potentially, but this would definitely be a scalp trade, and I would have limited risk. I would have a limited risk involved because the dollar more than likely is going to go crazy once our news breaks. So 159.36, maybe pretty good one. Maybe tomorrow would be even better if we push a little higher. Maybe get some convergence between that 13-period EMA and that 38%. That may be a really good trade as we roll into midweek trade. So a lot going on here. Let's go ahead and I got to check my news again because things are breaking so fast. It's just all about the deadlines. Once again, just sort of using this using CNBC is one of those things that we just reference because it's free. I'm not going to sit there and I'm not going to sit here and go on and on about how great CNBC is because I don't, they're all flawed. All these news outlets are flawed. That's for sure. Trump warns Iran's whole civilization will die. We already covered that. That's really an unbelievable headline. Strait of Hormuz blockage upends global helium supply. I'm going to talk a little bit of helium in a YouTube short that we're going to be making here in the next day or two. Really could upend the AI industry and also the semiconductors. Going to impact a company like NVIDIA in a big, big way. But right now, this is what we're watching. Stocks slide, oil gains as the deadline approaches. And a lot of people, it's always that, Trump always chickens out, taco. Gut feeling says that they're going to be doing something very serious tonight, no question. Once again, Trump has set an 8 p.m. Eastern time deadline for the U.S. and Iran to strike a deal on reopening the Strait of Hormuz. Otherwise, the U.S. will destroy Iran's power plants and bridges. However, his latest comments and new reports suggest an agreement by then is unlikely. As he said in a Truth Social post Tuesday, a whole civilization will die tonight, never to be brought back again. I don't want that to happen, but it probably will. So, you also said president still left room for the possibility the U.S. wouldn't end up attacking, adding that now that we have complete and total regime change where different, smarter, and less radicalized minds prevail, maybe something revolutionarily wonderful can happen. Who knows? So, that's vintage Trump. Just takes a hardline approach one side and then comes back with sort of a very optimistic post a little bit later. I don't know. It feels to me like they're not going to back off of this one, I don't think. But if you remember where we were last week at this time, coming off of that big 1,100-point Monday, and a lot of folks were saying there's a deal in the works and there's something that's going to be very positive that happens, it hasn't happened. In fact, it's gone the other way. So we're in a big situation here for the next 12 hours. Like I said, if anything breaks huge that surprises us and drives the markets crazy, I'll probably just jump on and do just a news update or a news brief, and we'll take a look at maybe some of the price action across your metals and your commodities markets. That'll be the big one. Also, U.S. futures, equities index futures, those are going to be a big mover and shaker as well. So a tremendous amount going on. Right now, we just don't know. So we're in a holding pattern. All right, everybody, I think I'm going to go ahead and sign off for right now. More than likely, we're going to be back later today, but I'm not going to schedule anything just yet. This news will break during the overnight. If you're in the UK or if you're in Western Europe, you're probably going to be sleeping, which is good. Get some rest because these markets are going to be absolutely crazy. And tensions have already been ramping up in the lead up to the deadline. The Wall Street Journal and NBC News, citing U.S. officials, reported that the U.S. carried out strikes against Kharg Island during the overnight. So Kharg Island's the big one. You're going to see more than likely your fuel prices are going to go higher, at least in the short term, dramatically higher. Just have to wait and see. Anything can happen. All right, everybody. I want to thank you for joining me today. I appreciate all the participation and things. You guys, if you have any questions at all,